Stock market investors, SoFi investors, welcome back to the channel. In today's episode, I'm going to give you 5 reasons why you should be excited about SoFi stock moving forward. We've been on quite the roller coaster ride over the last couple of weeks since earnings. Up, down, up, down. We seem to kind of settle in that $21 to $22.50 range, but I'm going to give you a bunch of reasons why you should be stoked about investing in SoFi stock for the upcoming future. Let's get into the video. All right, all my SoFi investors, if you could do me a huge favor, hit that like button. It really does help us get into YouTube's algorithm. And if you want more SoFi updates, more stock market educational videos, make sure you subscribe to the channel. Let's get into my 5 reasons why you should be excited about investing in SoFi stock as we move forward. My number 1 on the list, in no particular order, is the growth momentum isn't slowing down any time soon at all. In Q2, revenue growth was up 44% year over year, an acceleration from its prior period. Really good numbers coming out of SoFi. The company grew its membership base by 34% year over year, which I love to see, adding nearly 850,000 new members to the current ecosystem, guys. And we're on pace to be between like 13.5 and 14.5 million SoFi members by the end of 2025. Those numbers are killer, guys. If we take a look at the charts right here, you gotta love it. This upward trajectory in adjusted net revenue going up year over year is just remarkable what they've been able to accomplish. In this SoFi Blue, we see the Q2 adjusted net revenue year over year, $858 million in adjusted net revenue. Great stuff coming out of Anthony Noto and the team. And if we take a look here, here's the members, guys. This growth has been nothing short of remarkable. 34% again year over year. 11.7 million members in the SoFi ecosystem. We love to see that, guys. 846,000 new members in Q2 2025. I think the margins are going to continue to improve. The members are going to continue to accelerate. The revenue, profits, they're all going to continue to accelerate in my opinion. All right, all my SoFi investors, here's my second reason why you should be stoked to invest in SoFi moving forward. Accelerating loan platform business and the increase in fee-based revenue. Their loan platform business, which consists of several capital-light streams of fee income, in addition to securitizing loans and selling them to investors, the company has been originating a high volume of loans on behalf of third parties as well, and referring applicants to other lending partners. And we collect fees on all of this kind of moving of loans to other investors. I love to see that because it kind of limits the risk while we're still generating tons of revenue, guys. Its loan platform is generating high margin fee income at a rate of more than $500 million annually on a run rate of $9.5 billion in loan originations. Right, the fee-based revenue continues to become a bigger and bigger part of the overall revenue of this company, and it's high margin. Doesn't take a lot of expense to get that kind of revenue. I love seeing that. If you take a look at your screen right now, this is the fee-based revenue chart from their most recent earnings report. And we can see this ladder of acceleration looks really good to me, guys. Year over year growth, 74%, 72%. Those numbers are great in my opinion. Fee-based revenue now makes up 44% of the company's total compared with 27% a couple of years ago. And this shift is a big reason for SoFi's surprisingly strong profitability, guys. Take a look. They're guiding for $1.5 billion in fee-based revenue for 2025. The numbers look really strong in my opinion. And then non-interest income roughly quadrupled year over year, and the loan platform business has been the primary driver. Really good stuff here, guys, in my opinion. And number 3, profits are better than expected. That kind of goes in conjunction with what we just talked about. SoFi produced better than expected profitability in Q2 and also reported its highest earnings per share ever of 8 cents here in Q2 of 2025. 7 straight quarters of profitability, guys, and that's inching us closer and closer and closer to being considered to join the S&P 500, which would be huge for the stock and the company moving forward. It produced an 11% adjusted net margin, and adjusted earnings before interest, taxes, depreciation, and amortization, also known as EBITDA, increased 80% year over year. Really looking good, guys. Management also raised its full year guidance in 2025 for all major profitability metrics and now expects EPS to more than double from 2024. So we're top line and bottom line becoming a better business quarter after quarter and year after year, which is one of the many reasons I'm excited to be an investor in SoFi stock as we move through the end of 2025 and then into 2026 and beyond. Asset quality is improving, comes in at number 4. Remember, this is in no particular order. SoFi's loan net charge-off rate ticked higher in 23, but it has been in a clear downward trend for the last 2 years, which is great. Since it peaked back then at 3.98% in late 2023, the net charge-off rate for personal loans has declined to 2.83%. Great numbers, including a 48 basis point sequential drop in the most recent quarter. If we take a look at this net charge-off chart, up top in the gray is the personal loan net charge-off without the sale of delinquent loans. And then in this dark blue, we have personal loan net charge-off rate. We're just seeing a steady decline. Both of these, steady decline, which is great. It was pretty steady with student loans. It has ticked up, so it's something we have to keep an eye on. But over time, student loans is becoming a smaller and smaller part of this overall business model. Still a reliable one and one we can count on to grow in the future. But this net charge-off rate, we got to keep an eye on moving forward. But as these net charge-offs decline, the company just becomes more profitable, guys. That's the way we slice it. And then last but not least, coming in at number 5, student and home loans set to explode. Here's why I think that's going to happen. For the student loan segment, I think SoFi and other companies similar to SoFi are going to benefit by the student government loan limitations that are being put on by Trump's new big, beautiful bill. You know, it's really not great for students, but it's great for SoFi because they're going to need to still take out loans and they're going to be limited what they can get from the government. So they're going to look for affordable loans at companies like SoFi, which I like that. For the company of SoFi in Q2, student loan volume grew by 35%. Could see acceleration since more pandemic era federal student loan protections have expired recently, right? And with the new bill in place, there's a lot of stuff looking like SoFi is going to be a beneficiary of this new legislation, right? And then for mortgages and home loans, refis, I think we are at the forefront of an explosion at this point of the business model, right? Mortgage volume is going to explode as we start to see rates decrease. It's going to be a slow burn, right? We'll probably see like 2-ish rate cuts here in 2025. I'm expecting 4 in 2026. One thing we're going to have to keep our eye on in regards to interest rates is the relationship between Fed Chairman Jerome Powell and Donald Trump, which has soured as of late. Just something to keep an eye on, guys. But I think as interest rates come down, home equity lines of credit refinancing is going to happen in droves. And SoFi is going to be a direct beneficiary of that. The home loan business grew volume by more than 90% year over year despite a slow real estate market and high interest rates, guys. They were able to perform this business in the worst of times, right? High home prices, high interest rates are a recipe for disaster. And be careful trusting all of these real estate brokers out there that they're like, oh, it's 6.75% now. It's the cheapest it's been in months or whatever bullshit they're spewing. They just want to collect their cut, guys. Rates at 6% are not a good idea to get involved with. I don't care what your real estate agent or broker says. They are full of shit. Just keep that into consideration when you're making these loans, guys. You want it under 5%. In my opinion, right? If we take a look at the chart right here, personal loans continues to be extremely successful for SoFi. Student loans kind of has its ebbs and flows, right? Usually before the school years start, in the summer months, people are going to start to take out loans as they gear up for the fall and start their next journey in their education process. Home loans, right? Up huge in 2021, and it's been not great in 22 or 2023, but we have seen an acceleration over the last year or so. So I'm excited to see where the home loan business can take SoFi. I'm expecting it to be a huge part of this business model as we move forward over the next 12, 16, 24 months, in my opinion, guys. All right, there it is, guys. There's 5 reasons why I'm excited to be investing in SoFi stock and why you should be thinking about these types of things as you make decisions on whether or not you're going to invest in this company and the overall landscape. The market has been running hot, right? So we always have to be careful when we see, a year or two of, pretty much up and to the right. Be careful out there, but this company's fundamentals are extremely strong, and I think they're only going to improve in the future. Don't forget to like and subscribe. Peace.